Number from last week turned out to be upbeat. What are the implications for the tapering of QE, and how should investors hedge against its eventuality?
Well, I think that the non-farm payrolls, having come in as strong as they did at 195,000, definitely are going to focus people on the Fed starting to taper QE, possibly at the September FOMC meeting. So I think markets will remain on edge, particularly the fixed income space. We've seen, of course, quite a big adjustment already in yields, and my view would be that we've seen the major shock already, and that quite a lot of that news is already discounted. But I think we're definitely now seeing that with the jobs trending around 200,000, there's not really much excuse for the Fed to delay the onset of tapering. So I think the markets will have to face that. It's difficult to say how much more short-term reaction we might see when it finally does happen, but probably not as much as we've just seen when Bernanke drew attention first to that in May.
China releases a slew of economic data from Monday. What policy implications could there be, given the string of weak economic data releases so far?
Well, I think what we're going to see is a continuation of data which suggests a relatively weakish growth trend of around 6.5% to 7%. But I think what we've seen from the Chinese authorities is that as long as the labor market doesn't deteriorate, as long as the job situation is okay, then they're not going to respond to that with more fiscal and monetary easing. They are serious, I think, when they talk about the need to secure better quality growth. They're serious about the need to gain control of the credit markets, the so-called shadow banking explosion. And I don't think they're going to be panicked into fiscal and monetary easing on a significant scale, as long as the data is consistent with the continuation of this relatively sluggish trend. So I don't think that the data is going to do anything other than confirm that. So probably not much in the way of surprises in the Chinese data this month.
The Bank of Japan decides on policy on Thursday. How do we position then?
Well, as far as the Bank of Japan is concerned, I think they've managed by intervening more forcefully and more often in the JGB market to damp down the volatility. They seem to have gotten on top of that problem quite successfully, and they've actually been ahead of their target in terms of purchasing assets. So I don't think we're going to see any material change from them. I think they're not really the big risk events now. It's really we're going to have to wait until after the July upper house elections, which Abe looks certain to win with a landslide, and then see how he just really intends to tackle those structural reforms. That's going to be the crunch time, I think, after the July elections for Japan.